Do bailouts make things worse? Should empty properties be put to social uses? Or are you more concerned about the power of financial institutions? What do you think? Welcome to today's free discourse video. Today, we're looking at the state of the US commercial real estate market and its potential implications for the banking sector. We'll dive into the risks posed by distressed commercial mortgages and exploring why banks could face significant challenges in the face of rising defaults. Experts are sounding alarms about the possibility of a new banking crisis stemming from the troubled US commercial real estate market. Firstly, why are commercial property values declining? Several factors are contributing to this trend. One major factor is the shift in working patterns, with remote and hybrid work arrangements becoming increasingly popular. This shift has led to a decrease in demand for office space, resulting in record high vacancy rates and a significant drop in office property values. Additionally, higher interest rates, a general economic slowdown, and tightening debt capital markets are all putting pressure on commercial property values across various sectors, from office buildings to retail spaces and hotels. Secondly, why are banks at risk if commercial mortgage defaults rise? Traditional banks hold a substantial portion of commercial mortgages, and if default rates were to spike, it could have severe consequences for these institutions. With interest rates rising and property values declining, many banks may find themselves with assets worth less than their liabilities, potentially leading to insolvency. Furthermore, smaller regional banks, which often have a higher proportion of commercial real estate loans on their balance sheets, could be particularly vulnerable to bank runs if uninsured depositors lose confidence in the banking system. As we can see, the link between the commercial real estate market and the banking sector is complex and potentially fraught with risks. While some experts predict that the banking system will weather the storm, others think there's a possibility of widespread failures if the situation worsens. So what do people think about this? At the Free Discourse channel, we value the views of everyone and hope that our videos help you to formulate your own opinions. So, let's think about what views the public will hold on the state of the US commercial real estate market. Many will have concerns over the economic implications of the potential collapse of commercial real estate. They would say that bailing out banks and businesses, as seen in previous economic crises, could exacerbate the problem rather than solve it. Instead, they might suggest that Congress should consider providing monitoring and guidance to struggling businesses without resorting to massive bailouts, especially considering the staggering national debt. Some might also think government policies, such as remote work mandates during the pandemic, have contributed to the crisis. They would point out that while remote work may have benefits for some industries, it's led to a decline in demand for commercial office space, making the vacancy issue worse. Another perspective might focus on the potential opportunities presented by the surplus of vacant commercial properties. They would say these buildings could be repurposed for other uses, such as affordable housing, shelters for the homeless, or transitional residential housing for migrants. They might suggest rezoning commercial properties for residential or mixed-use developments. By converting these buildings into housing or community spaces, they believe cities can create more vibrant and inclusive neighborhoods while also mitigating the economic impact of commercial real estate vacancies. But some will be more skeptical of both government intervention and the broader economic system. They will question the effectiveness of government bailouts and be concerned about the concentration of wealth and power in the hands of financial institutions. They would argue that the current economic model prioritizes corporate interests over the well-being of ordinary citizens, leading to cycles of boom and bust. So, what do you think? On one hand, there's a valid concern regarding the implications of government intervention, with critics cautioning against bailouts and urging a focus on policy reform instead. On the other hand, there's an optimistic outlook calling for the repurposing and rezoning of vacant properties, seeing them as opportunities for addressing social needs and revitalizing urban spaces. However, amidst these contrasting views, there's a third perspective, one of skepticism towards both government intervention and the current economic system. When considering this issue, it's crucial to think about these differing viewpoints thoughtfully, recognizing the trade-offs found in each perspective. Ultimately, the path forward may lie in a nuanced combination of approaches. I hope this free discourse video has helped you to understand this topic more clearly. If so, don't forget to like the video and consider subscribing for regular updates on the most important of world affairs.